Welcome to The Explainer. Today, we're looking at the unrecoverable cost comparison of renting versus owning. Honestly, we're going to bring some much-needed structure to what is, for sure, one of the most high-stakes financial decisions you'll ever make. Let's get right into it. So is renting really just throwing money away? I mean, think about how many times you've heard that exact phrase. It's practically a universally accepted cultural dogma at this point, right? Society tells us that every single time you write that rent check, you're just tossing your hard-earned cash into a black hole. Meanwhile, supposedly, the smart money is out there building equity in real estate. And, that creates a tremendous amount of anxiety and pressure, especially if you just aren't ready or able to buy right now. But we really need to ask, is this age-old wisdom actually mathematically sound? Okay. Let's dive into this, because to truly test that cultural dogma, we need to introduce a formal, foundational concept, and that is unrecoverable cost. This is kind of the ultimate economic equalizer. It basically represents the money spent on your housing that you can simply never, ever get back. It doesn't build equity, it doesn't become a future asset, it's just money that leaves your bank account and vanishes into the economic ether forever. Now, obviously, rent is an unrecoverable cost, which is exactly why it gets such a bad reputation. But what about owning? Now, what's really interesting about this slide is how it exposes the hidden, totally ignored side of the American dream. We call these the phantom costs of homeownership. And yep, they are entirely unrecoverable. First up, you've got the interest on your mortgage. That's a massive premium you're paying the bank, literally just for the privilege of borrowing their money. Then you have taxes. I mean, nothing ruins a relaxing weekend at your beautiful new home, quite like remembering you owe a hefty, ever-increasing property tax bill every single year, right? Next is maintenance, which, let's be honest, is just a polite word for the inevitable reality of your roof suddenly leaking to the tune of $5,000 or your furnace dying on literally the coldest day of the year. And finally, insurance, which protects you from all the completely unpredictable disasters we just talked about. And the kicker? Not a single penny of this money goes into your home's equity. It just disappears. Just let that number sink in for a second. $21,400. When you actually sit down and run the math on an average home, these phantom costs, the interest, the taxes, those sudden maintenance emergencies, the insurance premiums, they can easily total a staggering $21,400 a year for a homeowner. That is literally tens of thousands of dollars just evaporating annually. It is not going into some magical savings account disguised as a house. No, it's a completely unrecoverable expense. When you really look at the raw data, the sticker shock of homeownership is very, very real. Let's move to and see how this builds, because visualizing these two paths fundamentally alters how we perceive housing. On the left side, you've got the overwhelming complexity of homeownership. It's kind of like a multi-headed monster of phantom costs draining your finances from four totally different directions. But then on the right, you have the simple, singular cost of rent. And yeah, rent is absolutely unrecoverable, but it's bounded. It's a known quantity. You write one check, and you are entirely shielded from the volatile surprises hiding on the ownership path. So, the crucial point is that old societal myth, it's completely broken. The reality is that everyone throws money away. Whether you're sending a year-long lease for a tiny apartment or holding the deed to a massive four-bedroom house, you are incurring massive unrecoverable costs just to put a roof over your head. The playing field is entirely leveled. And honestly, once we accept this mathematical fact, we can finally stop feeling so guilty about our housing choices. We can actually start making decisions based on economic reality rather than, outdated social pressure. And this brilliantly illustrates the core insight we should all take away from this data. It's a phenomenal metaphorical anchor, really. Both renters and owners throw money away. The only question is whose pipe is leaking faster. That right there is the true unrecoverable cost comparison. Look, your rent is a leaking pipe, dripping money every month. But the homeowner's mortgage interest, property taxes, and maintenance bills, that's just another leaking pipe. The smart financial move isn't about finding a pipe that doesn't leak because, spoiler alert, that doesn't exist. It's about calculating which pipe is leaking the absolute least amount of money in your specific housing market. So, whose pipe is leaking faster for you? Are the unrecoverable costs of rent in your city higher than the phantom costs of buying? Or is it the other way around? By stripping away all that emotional baggage and focusing purely on this unrecoverable cost comparison, you really take back control of your financial future. So, do the math on those phantom costs, take an honest look at the singular cost of rent, and figure out where your leaks really are. Thank you so much for joining me for this explainer, and I'll catch you next time as we continue to decode the world around us.